Looks like we got a couple people signing in. Hello, Azreen, a frequent viewer. Suri, Valdo, thank you all for joining. We'll get started in just a second. We'll wait for people to come in and get all settled. Excited to dig into technically speaking with Matt. Well, hey, Matt, while we're waiting for other attendees to join in, do you want to kind of give a quick overview of what we're doing here, kind of what technically speaking is about? And I can kind of share, after you go, I can kind of share my role in all this.
Yeah, for sure. So we're excited to kind of start this new series. I think we're going to do it, every 2 weeks, twice a month. But yeah, essentially we want to dig into some topics around that early stage tech investors may have if they don't come from a kind of super technical background themselves. So just so everybody knows, I'm the CTO of Shadow Ventures. We are a seed stage venture capital firm. We're completely focused on the built environment. But part of my job at Shadow is to kind of lead our the technical process with our portfolio companies and our incubator companies, and part of that is leading the technical diligence process. So when I'm out talking to people, I kind of usually I get two questions. One is, what does a CTO at a seed stage venture firm do? Because there's not a lot of me. And then the other question is, it often revolves around a specific question to a investment that people are looking to diligence or maybe have already invested in, and they just have specific questions around kind of the tech team and technical debt and all the kind of things that you may not fully understand as a non-technical investor. So we're really just trying to bring some of that knowledge to an open format and kind of share what I do and some insights that I may have, and hopefully help out along the way with some portfolio investments.
That's awesome. So my role in all of this, I'm Nick Durham with Shadow Ventures, senior associate here, kind of more on the investing side. I help Matt out with diligence, but I am the non-technical investor. So I'm the guy who doesn't really have the coding background. I'm interviewing Matt because I'm trying to learn, and hopefully you all will be able to get something out of, someone who's not, who doesn't come from a super technical background, who's trying to learn, through the diligence process, what are some really important factors and what you would look for out of a tech company. So so everyone is aware, my background's the go-to-market side. So I've been an operator in a number of startups on the go-to-market side. And, I think it's a situation where, for Matt and I, when we oscillate between deals, a hammer always sees a nail, right? So Matt's super focused on the technical side. I'm super focused on how their sales and marketing engine is looking, or what the potential of the market size is for a particular deal. And I get super fixated on, just how that looks, right? And the potentiality of the investment. So one thing I've really appreciated working with Matt is just how to, where the technology piece fits into early stage investing. And I think, I think oftentimes we, depending on the company, it can be very case by case, right? So depending on what sort of technology the company is building, the tech piece might be way more important than what the sales and marketing piece looks like. Also, the stage and maturity of the company plays a really big role here. So, depending on exactly where they fall in some of those scenarios, Matt might have more specific things that he looks for, and I might take a lesser role in the diligence process. Just knowing that sales and marketing isn't super important if you're looking at a pre-seed deal, right? There's just not going to be much there. So my job would then be to figure out their go-to-market once the tech or the product is built. But yeah, look, I think like the super interesting thing about what we're trying to do with this series is venture investing is becoming more and more mainstream. We have, I'm sure, a number of people on this call who are doing some sort of angel investing and who probably can't code or can code in a really light way. Maybe their background is technology or IT, but when you're actually looking at the defensibility of a solution, you still have many questions along like what makes a great tech product, what the technical vision of the team looks like, and how important some of these factors are when you're evaluating an early stage deal. So again, my role in this series is to help you understand, through a non-technical point of view, what really matters when you're diligencing an early stage deal. And Matt's the expert here. So I'm going to be kind of just interviewing Matt for a number of different discussions. And so today the topic is technical debt. It's a topic that's pretty common in venture investing circles. But I really want to like start kind of high level here, Matt. How do you define technical debt, and how do you define its importance with venture investing?
Yeah, it's a good starting point. I do want to start off, or I just want to say the bulk of kind of what I'm going to be talking about today is very applicable to early stage startups. So I don't want to get any angry emails afterwards from people at, established companies saying like, what the hell are you talking about? Like, you can't do that. I'm very much focused on kind of that, pre-Series A startup, and kind of the advice and the conversations that I have with those companies at the stage they're at. The second thing I want to say is part of technical debt, and what we'll get into, I think during this discussion, is really understanding the trade-offs associated and the risk associated with those trade-offs. So just like kind of software design and programming and whatnot, there's not one right answer. There's never one right answer. It's a very creative kind of process that you can take many different ways. So I want to just make sure that it's clear. Every situation is different, and there's really no kind of checklist that you can go through and say you're doing it right or you're doing it wrong. It's really a conversation, with each company. So having said that, definition of technical debt. Really, I define it as it's an opportunity cost. Basically, it's the trade-off between doing something maybe in a quicker fashion that isn't necessarily going to scale long term, rather than kind of taking the time up front to kind of focus on a longer term, more robust solution.
Got it. Okay. So one of the things that I think is a pretty important concept, like when we refer to technical debt, like it makes the analogy to debt, right? So think of a mortgage loan, think of a student debt loan. Technical debt, in a lot of cases, the way I think about it with my financial and go-to-market brain would be like the choices I make now related to investing in my startup have a consequence in the long term. So whether I decide to make like a very small down payment now on my company to get a quick sale, or because I just don't want to, I want to preserve my cash, whatever it might be, those have long-term consequences when you're building a company.
Yeah, that's right. And I think the reason that, technical debt is very much a buzzword. Like, let's not lie, right? It's thrown around a lot. But I do actually think it's actually a very good analogy to think of it as financial debt. Because as you're building, you basically, you say, I'm either going to do this now, or I'm going to put this in the technical debt bucket and take out that quote unquote debt, and come back to it and handle it later. And I think also it's also an interesting analogy, because just like actual debt, as time goes on, it gets harder and harder to pay off. So as more you accumulate more kind of technical debt, and also as time goes on, software kind of rots. We call it code rot. So the longer that something kind of sits unfixed, the harder it's going to be to fix down the road. So I do think it's actually a really good analogy, although it is a buzzword. Thinking of it in terms of kind of that financial instrument is actually appropriate.
So let's talk about so you mentioned how you define it as it's an opportunity cost, right? So let's talk about the trade-offs. I mean, opportunity cost is all about trade-offs. So you're a pre-seed company, you're a seed company, you're building the first version of your product. Talk about an example of, a choice you have to make to either accrue technical debt or to build, a more defensible solution that might be more expensive, but more scalable over time.
Yeah, so I think an easy example is if you think about something like scalability of the system from a technical perspective. So if I'm building, let's say I'm building the next, I don't know, let's just say I'm building the next Facebook, right? Let's pretend. I could choose to go ahead now and make that thing scale to 300 million users up front day one, but how long is that going to take me, right? That's probably not a good choice to make up front, because I'm going to be spending a ton of time making it scale in that way, which is by far not an easy feat, right? Well, let's even scale it down. Let's say 1 million users, right? Like I'm going to spend time making sure that this thing can scale up to 1 million users. Even that's not an easy feat, right? And the truth of the matter is, and this is especially true if we're talking about kind of business apps, right? Which is what we at Shadow focus on more. The Facebook example is probably poor because of that reason, right? But the likelihood that I'm going to need to scale overnight to 1 million users is basically zero.
Yeah.
So as an engineer, I get very focused on, like this is a hard problem. Like I need to scale to 1 million users. Like it excites me because it's a hard problem that I need to solve. But in reality, making that choice would be a poor use of funds. Simply because the opportunity cost of actually iterating and trying to find out what would work best for my customers from a business perspective, and even just building something to try and get customers even from a business perspective is much more important than trying to solve these kind of harder technical problems up front. So we run into that a lot. Like it comes up a lot with our companies that have a technical co-founder, and they've left some kind of larger job as an engineer, and they're just super excited about building this product, and they get kind of sucked into the big engineering problems. So I spend a lot of time kind of coaching people through that, and it's like look, like there will be the time down the road when you get scale that you're going to have to solve those problems, but that time is not now. Don't worry about those things up front. And I can't remember who, I heard somebody say the half-life of code. So if you think of as an early stage pre-seed startup, I'm going to be building a product, and chances are 6 months down the road, the code that I write is going to be thrown away anyway. Because the product that I'm building, it probably isn't going to be, I'm going to have to pivot in some way, right? Like I'm probably solving, maybe I'm on the right track, but probably the problem isn't going to be the same thing that I'm solving in 6 months. It's just how it plays out, right? More times than not. So, I could spend weeks and weeks trying to build some super scalable engineering problem, but at the end of the day, it's all going to get thrown away. And even if it's a slight pivot, the more complexity you have up front with that build out, the harder it is going to be to pivot, right? So you're like building tech. So by trying to reduce your technical debt up front, you're going to end up having more technical debt because you're trying to build on something that was over.
Fascinating. Love it.
Yeah, it's like Inception. You're trying to build over something that was over engineered and just harder to pivot. So
Matt, so it sounds like to me you're actually recommending some form of taking on some form of technical debt as an early stage startup. Is that right?
That's absolutely right. And I mean, careful, because I'm not advocating. So again, this is the problem with the loaded term. I'm not advocating for bad code, like in any way.
Not putting words in your mouth.
Yeah. Well, that's the first thing people say. Like, what do you mean? Like, you're suggesting I write shitty code? Like, well, it'll be buggy. No, that's not at all what I'm suggesting. Right? There's a big difference between actually Martin Fowler, who I respect a ton. He's not a startup guy, but he's a code guy. He worked at Microsoft for a long time, and I followed him for a while. He's a big kind of developer advocate, written a couple books. He actually lays out kind of the difference between deliberate technical debt and reckless technical debt, right? So like there's a difference between saying, I have a product that I'm building and I'm going to actively make a choice to maybe shortcut something or, you know, do something faster that maybe isn't the best choice long term, but I'm going to actively make that choice now rather than not knowing any better, or making just crazy, you know, wild assumptions and not kind of thinking through those long-term aspects, right? So I think it is super important to distinguish between those two, because I am in no way advocating for bad code, spaghetti code. Also not advocating for buggy code. MVP does not mean buggy, right? It still has to work, and it still has to work well. It has to delight the user, right? But where possible, you have to make those choices where it doesn't necessarily impact business value. Like me building an app that can scale to 10 million users tomorrow, I don't have any users right now. It's not going to impact the business value at all. Nobody's going to use it and be pissed off that it didn't scale to millions of users, because like I said, I have no users. So it's those kinds of trade-offs.
Right. Okay. So with that disclaimer out of the way, so I do like that comparison, deliberate versus reckless. So you're saying you advise for early on, deliberate technical debt is smart.
Yes.
Can you talk about a decision that might be deliberate that a founder might want to make? And as an investor, can you talk about how to figure out that founder or the technical founder made that choice deliberately, and they're thinking about technical debt the right way?
Yeah, let me kind of flip that a little bit. So I'll give you an example of a recent not deliberate choice that we saw at Shadow. So we had somebody pitch us, and they had built some kind of construction bid platform. I don't remember exactly what it was, but anyway, they had built their entire MVP on WordPress. So it was basically a WordPress plugin. So
That's
if you're not familiar with WordPress,
can't see the screen.
Yeah, if you're not familiar with WordPress, it's a blogging platform. It is not made to build products on, unless they have to do with blogging. Yes, it's content management. It was the wrong choice, right? But he got like we sat down with him. I said, look, man, like this isn't going to work. Like you have to redo this before we will even have a conversation with you about investing. And he got like super pissed off, and he's like, what? Like I thought the point of an MVP was, you know, we build it as fast as possible and get customers and you know, prove out our value proposition and all this stuff. It's like, yes, that actually is true. However, in your case, you're coming to us, you're looking for an investment. You know, you want to raise $1 million seed round so you can take this thing to market. But like, hey, guess what? Like this product that you build isn't going to market. Like you're going to get nowhere with it. Like you have one customer kind of using it right now. Like if you get any scale on that thing whatsoever, it's not going to work, right? Like you're not going to be able to customize it for different customers' needs. It's going to be a mess. Like you're going to spend, you know, it's going to turn into a mess quick. Like there's no way that we can write you $1 million check and let you try to take this thing to market, because there's just too much technical debt there, right? So I think that's a good example, because it's like kind of something not to do.
Of a reckless choice.
Yeah, it was a reckless choice, right? And he didn't even know. Like this was the first time he had heard that. He's like, you know, like he had no idea, right? And I think that's part of it. You know, if he had come to us and he said, look, like I built this, you know, I got this platform built, not really a coder. Like the guy who built it said, he can build it on WordPress and we can do it in, you know, 40 hours. And like, I know we have to redo it. And like, here's the roadmap, you know, of how we're going to do that. That would have been another conversation, right? But like not having that kind of knowledge up front, like not even recognizing that there was a problem, right? And that kind of that was the issue.
It shows a pretty significant blind spot, right?
Yeah,
the fact that he
totally
thought his solution was like bona fide and ready to go to market, could scale quickly through WordPress is
totally.
I mean, that's a major blind spot,
totally,
which is
totally.
Yeah. Right.
Yeah. And, you know, we've put out term sheets to people who I felt like actually would need to rebuild their whole platform, kind of from the ground up. Like it was built, you know, built on kind of things like Salesforce and whatnot. And like I felt strongly that, as part of their seed round, as part of kind of taking what they had built for their MVP customers and transforming that into a generic product that they could take to market and have a repeatable value proposition and sell it. Like I felt very strongly that they would have to rebuild the product, and we were okay with that, right? But they were also okay with it. So everybody was on board. There was a path to get there. We weren't blindly writing $1 million check to them and hoping that the platform was going to work. Like everybody kind of knew what the plan was to quote unquote pay off that technical debt.
Mm-hmm.
So yeah, I think as a team, like understanding what technical debt means and understanding a path to paying it off is super important. I also would say on the flip side of that, if a company comes to me and says, and I evaluate their product and they have no technical debt, that's as much of a red flag as the opposite case, right? Because having technical debt is actually healthy. It means that you focus on the right problems. It means that you were able to go and move quickly and build a product that people like, and get feedback and iterate on that, versus going off in a corner and spending all your time working on crazy engineering problems and then coming to us trying to go to market with that, if that makes sense.
Mm-hmm, mm-hmm. Let's actually talk about let's talk a little more specifically about the company you mentioned where they accrued technical debt. It was a company we were looking at for investment, accrued technical debt. Everyone was aware, everyone in the scenario, including us, the investor, was highly aware of what their technical debt looked like, what the actual cost was. The reason this was important from an investment perspective, obviously, is a large chunk of our investment dollars were going to go rebuild the product. Yep. So for us not to understand what the actual cost of technical debt was in that scenario would be insane.
Yep.
Because our entire check size is basically going to this tech build. Can you talk specifically about some of the choices that they made early on when they decided to accrue technical debt and why they did it? Because I think this is a really important part to understand. A lot of founders out there, even technical founders who have the skill set to build a really defensible solution, to not accrue early technical debt, it actually is a smart choice because you can get revenue in the door. So what does accruing technical debt look like at the early stage? And you can use this company as an example.
Right. So I mean, in that specific choice, yeah, it's exactly as you described. I said, like, why did you do this? So the issue was it was built on the Salesforce platform. We did not feel like from a venture fundable perspective that was the right choice, right? Like it needed to be kind of built off the platform for a variety of reasons that we don't have to get into. But yeah,
hey Matt,
yeah.
do you mind for people who don't know, can you explain a little bit of what the Salesforce platform is and what that that build looks like?
Yeah, so Force.com provides kind of this all-encompassing platform where you can build an app, basically a line of business app that runs on top of their their quote unquote platform. So if you think of like it's a very high level of abstraction. You don't have a ton of control over things, right? Like you write code, they kind of have their own version of Java that you can write the code in. The UI is very restricted to kind of what they give you. Reporting is a bit limited, like they have options, but it's just all a bit limited, right? So when you talk about having something that's that kind of tightly controlled and fits that tightly into the Force.com kind of way of doing things, if you're looking at taking that product then to market, and genericizing it for a customer and being able to move quickly and build features without having to fight the platform and that kind of thing, that's where the issues were going to come into. So when I said that to them, it's like, hey, why, like walk me through the decision to do that. And the decision was, look, we didn't have a lot of money. We were trying to get a product to market. We weren't even sure if this was something the market was going to accept. So we were just trying to build something as quick as possible. I had some experience building on Force.com before, basically because the UI is already, it's so controlled, right? Like it was, it's more or less like you can drag and drop and create some UI and that kind of thing. Like we just felt like it was the quickest way to get us from point A to point B and get a paying customer. And they did. They had a paying customer to the tune of a couple $100,000 a year, I think. So I would say, I said, yeah, that was probably the right choice, right? Like I couldn't fault them for that decision. But then again, they said, we know these are the limitations. Like, here's some things we've already run into. Here are some things that we have on the roadmap that we feel like are probably the Force platform is going to hinder us with in the future. So it was it was just a very conscious effort on what needed to be done to pay that off. But I couldn't argue with the we've got to get to market quicker, and we don't know if this is going to work. And this was, as a development team, as a developer, I felt like this was the quickest way for me to get there, and I just couldn't argue with that.
Mm-hmm. So, okay. So technical debt, feel like we have a pretty good understanding of what it is, the fact that it's, for an early stage company, it's a trade-off. Oftentimes it's a smart, healthy trade-off. How do you just, want to think through a little bit of actually how you look at it from a venture perspective? When you go to assess technical debt, how do you factor in like how to calculate it? Like what are the situations where you look at the actual financials and what it's going to take to pay off the debt, and how does that factor into the actual investment?
Yeah, I mean, that's tough. And there's kind of varying levels. And what we were just talking about with the Force thing, I mean, that was basically a rebuild of their entire cloud. I mean, there was very little that they had knowledge that they learned building it, from a kind of business process perspective. They had that knowledge that they could take with them to try to rebuild the next version. But I mean, by and large, that was a rebuild, right? And that's an extreme case. Most of the time, that's not something that would happen. So I would say on the smaller things, like from our perspective, it's hard to predict, because especially me doing diligence and going in, even if I'm looking at the code, like it's a little hard to say. I can't necessarily put an hour or dollar value on how long it's going to take to rebuild the whole, to kind of fix these technical issues. So it's more of, when I'm looking at it, assuming it's not a huge rebuild, like it's really more for me is does the team understand it? And are they going to be able to make smart decisions to pay that off, as they go, and basically do the most with the money that they're getting in their round, and then pay those things off, right? So it's less of kind of an overall, I want to estimate or put a price tag on, what the value of this technical debt is, or what the negative value of the technical debt is, and more of, is the team capable? And I think that's really, like, honestly, I think that's really kind of the rub. Like, if you, like, as an engineer, basically from day one of college or school or whatever, even high school, like at day one, like, we are taught to build robust products that work. Like, it is ingrained in us, right? Like, you're not going to school and learning how to like take shortcuts, right? And as you go out into industry, and especially as a software engineer, like, if you go and work at, any established company, like, no one is going to congratulate you for taking a shortcut. Like, it's just not in your nature, right? And for good reason, because at a larger company, an established company, like, I don't pick one, like, let's say Airbnb. If I'm an engineer at Airbnb and I'm assigned to go build, a feature for Airbnb's website, and I mess that up, let's say I underestimate, kind of scale, and we deploy it, and basically, what's the worst that could happen? It brings down the Airbnb website. Airbnb loses $1 million of revenue per hour, or whatever the number is, right? And that's a huge problem, right? The kind of beautiful thing about a startup with no customers is you actually don't have those problems. So detaching yourself from that view, from that kind of reality that you live in as an engineer, of where you say, I have to do everything A to B, start to finish.
By the book, right?
By the book, T's crossed, I's
And it's kind of liberating.
A little bit. Well, it is, but
right?
It is, but to get there is a whole nother mindset, right? And it is not an easy one to get through, I can assure you. And I kind of have, I mean, it's interesting if you look at my career, like, I started out at a venture-backed startup as an early employee, went through a very successful exit. I had my own startup, a couple of startups actually. I ran a dev shop for a while, so I was able to kind of be kind of lead the product build for, half a dozen different companies, some of them venture backed, some of them bootstrapped. And it took me a really long time. It took me a really long time to figure that out. Like at first I was completely the opposite. Like I was doing it completely wrong. I was totally focused on engineering problems. I was not going to take any shortcuts. And I like slowly over time kind of, I guess, instinctively figured it out. And it was not, I mean, it took me years and years and years to realize, like, to consciously think, okay, like we don't need to be focusing on these things. Like the biggest risk to us right now, the biggest risk to this company is running out of money. It is not scaling to 1 million users or solving this crazy technical problem or whatever. It took a long time, and I say that because like I don't think I'm any different than any other kind of software engineer. Like we're just not wired that way.
Right.
And it takes I wish that somebody like me had sat down with me at my first startup and had told me that, right? It would have saved us a lot of time and pain and money.
I mean, it's a pretty fascinating thing. And I think, look, this is true not just with engineering. This is true across any profession, right? So like you look at, you study any famous artist that was classically trained, I imagine like, Picasso, anyone who kind of grew up in the Renaissance era, like they had to learn the rules first to break the rules, right? And it's just any sort of profession where you are required to understand the minutia of the rules to create something great. At some point, you have to break through and figure out what works for you and what's practical. And what you figured out, and I think what you're saying to investors and startup founders who are building products and investing in companies, like you need to be aware of this dynamic and understand that there's a practical element to building code. It's one that where ego really can't be involved. Like I want to build the most perfect tech solution. I want to write the most perfect code to satisfy no one, when really what matters is keeping the doors open and being able to eat at night, right?
Yeah, absolutely. And I think it's that kind of scrappiness that I feel like is lost a lot of times on technical co-founders. And it's, it can't be left, when I'm evaluating a team, like it cannot be left to the CEO of the startup to drive that behavior. Like the CTO, the technical co-founder, the person writing the code, they need to have that kind of scrappiness ingrained, like in their culture. Because as somebody who's leading the dev team, you're going to start hiring developers. And like, if you don't have that, if you don't make that a priority in your culture, like it just won't happen. It's not going to naturally happen. So yeah, I think it's very, very important. It's one of the key things that I look for sure.
So, okay. Let's talk a little bit about how to pay down the debt, right? Yeah. So I think we touched on this a little bit from an investment perspective. We're constantly advising startups on how to pay down, when to pay down their debt, what the cost, what their cost allocation should be over time with respect to the debt. So just talk about like how you think about trade-offs once you're conscious of how much technical debt exists, how you think about paying it back over time.
Yeah. So I think it starts with, you have to understand, like if I'm to pay this off now, what do I gain from doing so? I think that's super important. Just paying technical debt down just because it's there, probably isn't the right solution. So, it generally becomes abundantly clear when that time comes. So for example, if I've done something, I've kind of shortcutted something, like maybe it's causing, development cycles to elongate. Maybe there's a bug in production and it's hard to kind of debug it and figure out what the issue is, right? Like it becomes abundantly clear, like there's something wrong and it's causing us some sort of financial hardship, whether that be time from developers, whether it be lost revenues, whatever it is, right? Like it starts to just become super clear. So I think if you're looking to pay off technical debt and you're kind of that pre-Series A early startup, I think that's the important thing to look at. It's how can if you can't come to me, let's say it this way, if you're the CTO and you can't come to me as an investor and tell me why you need to spend the time to take you off of building new features or, building something for a customer. If you can't come to me and succinctly tell me like why you need to spend the time paying down that technical debt, chances are you probably shouldn't be doing it, right? Like, so you have to be able to make the business case to do it. Once you move past your kind of Series A, like, I think the game changes a little bit, right? The name of the game then is it's scale, and that's, scale for users, that's scale for bringing on more developers. It's all those things, right? So it's a bit of a different story, but yeah, I think pre-Series A, like, that's the trick. Like, why are you doing this, and what is the benefit to doing it?
I think one of the interesting dynamics so I'm a former startup operator, as I mentioned, and one of the things, and I've never been on an engineering team, but I've worked with engineering teams who face this dilemma. And the interesting thing is, like, from an investment perspective, I'm totally cool with, I'm cool with the logic of paying off technical debt. Like, our investment is, running 8 to 12 years potentially if we're seeing it through to exit or IPO. Our model's a little different, right? We would pursue early liquidation, but for most investors, that's the case. I don't really I'm thinking long term, right? So I'm almost more averse to you saying like, hey, I need to go out and get this customer and build a custom solution for them, and rather than, hey, you should stay focused on building the feature set for a genericized product, right?
Right. Well, I think there's no right answer. But I think, from my perspective, again, the running out of money is my biggest concern for any of our startups. Like, you don't want to run out of money.
Yeah.
So if you need to kind of go out and say yes, like, that's what you need to do. Early stage startups, like, there are no, like, we don't say no. Like, you do not say no during the sales process as a seed or pre-seed startup. Like, that's just that's kind of the rule, right? And so as long as you're not veering so far off track that you're completely subverting kind of core product, like, as long as there's something to be gained where you're adding the core product, like, I think you kind of have to say yes, assuming it makes sense, assuming there's enough money there to make it make sense financially.
For sure. So one of the things you mentioned I thought was really interesting. Technical debt is not just code problems. It can be more than code problems. Can you explain what that means?
Yeah, for sure. So, that obviously the code problems are what we think of the most, but, even things like documentation, process, that could be deployment process, that could be development process. Those can all create, what I consider technical debt, and even down to team, not having the right team in place they don't value the right things. They're part of the problem of technical debt, because they obviously are contributing to that technical debt. And it's like, early on, like, again, like, we do what we have to do to get a product out the door. And sometimes that means not having necessarily the right people on the team, or the people who are the right people at that time are no longer the right people. Like, after we raise another round, like, we need to take it to the next level. So those are all things that kind of go into that processing, right? But I think it's also interesting when you think of that. Technical debt is one of the bigger reasons why I feel very strongly that dev shops and early stage startups don't go well together. And having run a dev shop for many years, and having built a ton of products for startups, I feel like I've seen it play out even at my own company that I own, my dev shop, many times, right? And the problem, I feel like, just comes down really to a cultural problem, where as a dev shop, I am incentivized to actually to create no technical debt. Like, those are my incentives. I get paid by the hour, or I get paid for, project completion, but I get paid for it to be right. And actually, I have liabilities. If I don't do something right, I actually have the liability of getting sued, because there's a clause in my contract that says I'll, to the best of industry standards, I'll do the job, how it's supposed to be done. So actually, the incentives are just very much not aligned. And like I said, it's healthy to have technical debt. And if you have a development team who's kind of their culture and their incentives are aligned to not create any technical debt, like, that's obviously a problem. You can see why.
Yeah. Let's talk a little bit about hardware and software. We've mainly been
Yeah.
speaking specifically about software, but how do you think about technical debt for hardware?
Yeah, so it's obviously a little different, right? It- if you're talking about, hardware and kind of doing things to get to market, yeah, obviously, if you ship a device and it catches on fire and burns down a factory, like that's not good. But at the same time with software, if it's something that's mission critical, it could be something to do with medical, things that are like a life and death situation that can create life safety issues. Obviously you have to think very hard about what you're doing and make those trade-offs very carefully. But I don't think overall as a concept, I don't know that it's all that much different, because my whole point is that you have to make those trade-offs based on what's appropriate for you and your business at that time. So with a hardware company, if there's a risk of it catching on fire and burning down the building, like that's obviously a trade-off that you don't need to make, and you should evaluate that, and be careful with that decision.
Hmm.
But yeah,
Hmm.
I do think overall it's tougher. It is much tougher to move quickly with hardware. Like there's just
For sure.
for
Yeah.
a number of reasons, cost being one, but also just the problem of having to create that physical device. Also the deployment of that device. Once you've got it out in the field, like it's hard to get it back and replace it if there's an issue.
Yeah. I think yeah, it's a definitely an interesting discussion. I think when most people, it seems like when most people are referring to technical debt, they are referring to software
Yeah,
trade-offs, right?
yeah,
And so you mentioned this earlier. I want to revisit this with the choice of hiring a dev shop versus building something internally. Technical debt incentives and just the entire incentive structure of the arrangement is
yeah,
vastly different,
yep,
and the debt you accrue is going to be vastly different in those two
yep,
scenarios. Um, Flexibility, the flexibility that you would have with an in-house dev team that, I don't know, I mean, you're the dev shop guy, but probably the dev shop could potentially do a better job. Maybe you're not able to pay for the best engineers early on. Maybe you have to sacrifice a little bit of architecture and speed to market, um, for, technically better code, but the
yeah.
flexibility that you get in return from an in-house team, like, is kind of invaluable. Just, can you talk a little bit about that?
Yeah, for sure. I think that's. I laugh. I think that's. Oh man. I mean, all those things you say are valid. Like I think one thing to think about, um, with a dev shop, you know, gosh, it's so tough. Yeah, like
Conflicted.
yeah. I mean, a little bit. I'm not really, because I'm very much for having an in-house team. Like, I would question if you're saying like, look, we can get better, code development architecture with an outside team. Yeah, I would question that actually, and I would say why. Like, if your technical co-founder isn't capable of producing the best, the best for you, then maybe he or she is not the right technical co-founder.
Yeah.
Um, so I'm a little conflicted there. I hear a lot of times people. Sorry, I'm gonna get to your answer, but I feel like a lot of times people make this claim like, we can't hire. There's no way we can build an in-house team fast enough. I'm just a non-technical co-founder. I don't know how to write code. I need to get my product to market. I have this fantastic idea. It's going to change the world, blah, 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 on and on and on. Right. Um, the, so the knee-jerk reaction is, I'm going to go hire a dev shop. But look, like, dev shops, while they are incentivized, like I said earlier, they're incentivized to not create technical debt. They are not without, their flaws. They will not deliver flawless code. There will always be some level, of kind of just having gone down the wrong path, or technical debt of some sort, right? So like it will still be there. It may be less, but it will definitely still be there. But look, I think the important thing, though, the really important thing is, when you're talking about trading off the code from a completed project with a dev shop to an in-house team, people have this idea that that's just going to like happen, and that's not how it works. Like, there's actually technical debt, if you want to get into it, there's actually technical debt created from that handoff. because the people who built the code, who architected the system, who know the system inside and out, have been supporting it, are suddenly going to go away, right? And that in and of itself actually creates a ton of technical debt. We had, when I was running my dev shop, like we called them software refugees. Like we had people who had gone from dev shop to dev shop to dev shop. They had no friggin' clue what they were doing. And they thought, well, this dev shop isn't gonna, they're not doing it for me. I'm just gonna go to the next one. And then that one's not doing it for me. I'm gonna go to the next one. And it gets worse and worse and worse every single time. Because everybody's got, like I said, there's no one way to write software. Like there's a million ways.
Sounds like a nightmare.
It's a complete nightmare. You come to me with a requirement, I can literally write that a million different ways. Like I can make the code a million ways, right? So me as a team, my team has built it one way, and then you just yank it and take it to the next dev shop. They're going to have a whole different set of ideas, a different skill set. They're going to be comfortable with different technologies, different libraries. So they're going to there's instantly a gap, period, right? Yeah. And then it becomes, well, now if you have customers, now we're supporting this software. So there was a gap with the handoff. Now we're trying to support it. Things aren't working. The team isn't familiar with the code base. They're not familiar with the libraries. They're not familiar with the technology. So now they're going to start going in, they're going to start band-aiding things because they got to get the thing working. We got customers like beating down the door because nothing's working. So then there's a bigger gap, right? And it just gets worse and worse and worse. So like, I've just seen that. I have seen that story way too many times. And I feel like as part of your job as a founder, as a non-technical founder, like your first job is to find a technical co-founder. If you can't sell it to a technical co-founder, or you can't go get the money, like then you're failing at your job. Like that's part of the job.
So here's a question. So that the deal that you were talking about earlier, that basically they were conscious and aware that they had accrued this technical debt. They made choices up front to get sales on the door. Very typical scenario of a healthy technical debt situation.
Yeah.
They were in a spot where their technical founder was maybe not the right person to build to build their product off of force.com, right?
Yeah, maybe.
So just in that scenario, let's play this out. Like they can't they can't build the product that they want. Dev shop is of course on the table as an option. So we're investing, our dollars are going to that dev shop. Or do we say, like, as an investor, like, of course, looking at this purely through the lens of venture, I should not be comfortable with someone doing a dev shop in that scenario?
No, I mean, I don't think so. I think as an investor, the only way I'm comfortable with it is if there's continuity. So there's got to be somebody in-house who can see that project through, who can first of all lead the dev shop and tell them, like, provide guidance and oversight, right? Like, look. Like as a technical, non-technical founder, like you wouldn't just go out and pick off a developer off the street and be like, go do it, and have no idea. Like that would be a disaster. Like I don't even have to say that would be a disaster. That would be stupid, right? But that's what we do with dev shops. Like we go and we find a dev shop and we have a conversation with their sales guy, and we feel comfortable that they can deliver because they're a dev shop. I don't know why we feel comfortable, but we do, and then we let them go and do it. But we have no technical oversight, right? So you've got to have somebody in house who can one provide the technical oversight, and two, who can make that handoff, that transition smooth, so that after the project is done, he or she is able to oversee it and make sure that it kind of stays on the rails because it's part of their vision. So they'll take ownership of that and keep it on the rails after the dev shop is no longer involved.
That's good. That's good. I like it all, Matt. I like it all. So we have 10 minutes left. So everyone who's still on the call, what questions do you have? Feel free to put them in the chat or the Q&A. We're happy to address those here live. If you have no more questions, I guess in the meantime, Matt, is there anything else you want to mention specifically related to technical debt that you think is important?
Yeah, I mean, I think it's important to keep in mind that good software is never finished, ever. Like there will never be, and this is a problem that if we're talking about dev shops, I don't want to make this whole thing me railing on dev shops, but if we want to talk about mistakes that non-technical founders make, is that they think that software finishes. And the truth is that good software does not finish. It's never finished. It will always be evolving, and it will always need maintaining, right? So code rot, I mentioned that earlier. Code rot is a real thing. Some people call it software atrophy. I like saying code rot. But like, just given a perfect piece of software, as time goes on, things will stop working, because everything in software is an abstraction. And so as versions of Chrome get updated, and versions of Internet Explorer and Windows and all, everything gets updated, right? And everything is an abstraction. So things break over time, whether you like it or not, right? So I think that's also important to factor in. And the longer that you have, the longer that technical debt exists, possibly the more exacerbated those problems will get as well, right? Because the whole thing just starts atrophying. So I'm a little biased, having come from the coding world, and I still do it, and I still help our portfolio companies with it. But you have to treat it, you have to treat the software as kind of a living, breathing thing. And it sounds a little corny, but it's true. And it deserves respect. And you have to be flexible and open to resolving issues. I mean, it's, I think it's an important thing.
Mm. So Sri has a couple messages here. Can we connect with you on LinkedIn? Recording will be available after for everyone. So yeah, feel free to go back and revisit. Matt is available for one-on-one sessions. We'll go ahead and pawn him off. How does technical debt work if a company is based on an open source project? Good question.
Great question, actually. So that's a really good question. It can actually exacerbate it a bit. So it all depends on how you're going about kind of the build, right? But if you think of it, if I go to an open source project and I fork it, so that basically means, for those of you on the call that don't know, I take a copy of the code as it exists today in the open source library, and I basically take it and start working on it on my own. At some point, those two code bases are going to diverge significantly, right? So you've got the open source project, which is actively, I would assume, actively being developed. So there are open source developers working on it, fixing bugs, adding new features, making architecture changes, all sorts of stuff, right? It's like it's its own code base, right? So then if I've copied it, and then I'm over here making my own changes and fixing my own bugs and suiting it to fit my needs, at some point those two things diverge enough where you can no longer get it's called upstream, right? You can basically no longer get all the changes that were made in the original code base and merge them into your kind of forked version. So it can actually exacerbate the issue, because those bugs will basically never get fixed. It's too hard to merge the code in, and so you'll end up being responsible for those bugs yourself, right? If you can keep that to a minimum, and you can keep it going for a while, then you get the kind of benefit of being able to merge those up. But a lot of times, it can kind of exacerbate the issue. And I think also to that point, with an open source library, unless you're super familiar with it, like your developers have been contributors on the library, if it is a significant size project, it's going to be hard. Like I said, it's kind of like the handoff between the dev shop. Like, things have been done a certain way. Your team might not be familiar with it. So there may be decisions that are made while you're modifying it and developing on it that are not optimal. And you would have no way of knowing that unless you have significant experience on the kind of project. So in many ways, it can exacerbate the problem. Yeah.
Hey Matt, this is a dumb question. Is there any way to build my solution with an open source project without forking it? Like, can I I'm looking at downloading the open source project and building it offline, like much like I would download a Word document versus a Google Doc. Is there any way to build live, like with the actual updates that are being made to the project?
Yeah, so it depends on how the project is architected. So the answer is it just totally depends. So if it is architected in a way where you can kind of build, I describe it more as a plugin model. So you're building something independently, and then using that program unmodified as it is, and then interacting with it via APIs or what have you. then that's how you're going to keep it completely separate. Which actually is a great idea if that's available. But a lot of times when we're talking about kind of starting with an open source project as a base and modifying it, like that can get limiting depending on what it is. So it can be a little difficult to do that. Okay. But the way you're describing is, I mean, that happens all the time with open source projects, but it's not so much that you're building on top of it, it's that you're using it for a feature or for some facet of your technology, but not necessarily that you're building on top of it, if that makes sense.
Got it. Yeah. That's a great question, Sri. Thank you for sharing that. Looks like we're just about out of time. Any final questions? You can put them in the chat or the Q&A. Just really quickly, thank you everyone for coming. This is our kind of a trial run for our Technically Speaking series. If you all have any feedback for kind of the content and what you'd like to see in future episodes, I think that'd be awesome. We're definitely wanting to hear kind of what investors are most interested in hearing about on the tech side of venture. Again, the goal is to kind of demystify the process, right? If you don't have a strong technical background, it can be the tech side of tech investing, especially related to diligence, can be super overwhelming. And again, the point is you can lose a lot of money if you don't understand some of these core concepts. So we're just trying to be a resource for that. That's the point of the series. And thank you for coming out to episode 1. Many more to come.
Yeah, and I dropped our emails in the chat, so feel free to reach out anytime. We're happy to talk further.
Cool. Thank you, everyone. Cheers.
Bye.